Hello, everyone. This is Mark Lynn with Healthcare Business Specialists in Chattanooga, Tennessee. Welcome to today's webinar. The webinar title is Updated Information on Provider Relief Funds for RHCs. And we want to thank our sponsors, Azalea Health and ChartSpan, for making these webinars possible to do for free for you guys. And the information is updated as of July 31st. So there's my ugly mug. You can see me there. There's my contact information. If you need to get a hold of me, here's Danny Gilbert, and Danny will be watching over everything and behind the scenes trying to make things work for us. So Danny will be there for us. Again, here's Azalea Health. If you are having billing issues or you're becoming a new RHC, we've been partnering with Azalea with our clients, and it's been working very well. So we appreciate them doing this. If you're not a member of our Facebook group yet, we have about 1,800 members now, and it's a lot of great information there, a lot of great people that are helping RHCs out to answer their questions very quickly and very efficiently in that Facebook group. And that's where we'll put out information about webinars and seminars and things like that. So we appreciate that. Here is what we do. I won't go over that to take your time on that, but just know that we like to work with rural health clinics. That's what we do. And then here is where we put all of the resources on here. There's actually the slide presentations are on this website, theruralhealthclinic.com COVID-19, and you have the slide presentation over here in your handouts. And I emailed it to you. If you signed up, I did email that to you as well. So you should have the slide presentation. We do have some great panelists today. So if I get off the tracks here, we have some people to get me back on track here. Charles James. Charles, why don't you introduce yourself and tell us a little bit about what you do in your company, and that'd be great.
Thank you, Mark. Thanks for putting this together and allowing us to be here. The picture of myself and CMS Administrator Verma, I hijacked that picture at the NRHA Policy Institute. She has no idea who I otherwise am, just for the record.
You're very important, Charles.
We're a billing and revenue cycle management company based in St. Louis. We're resellers for Aprima EMDs, and we've been in the rural health clinic consulting space for a long time. I serve on a couple different associations and just have been plugged in, driving this COVID emergency stuff for our clients since about March 13 now, right? So we're based in St. Louis, and we've got a team of about 25 people. So
wow.
Thank you for allowing us to be here. Thank you.
I didn't know you were that big. That's fantastic. Okay, let's see. And the next one is Douglas Swartz with Azalea Health. He's co-founder. Doug, you want to tell us something about yourself and a little bit about Azalea?
Yes, I'm a co-founder. Azalea Health does two things. We have a world-class cloud-based EHR system that is focused on rural hospitals, rural health clinics, and we also have a billing service. So we're based in Georgia. Most of our billers are in Georgia, and we have some expertise in RHC billing and reimbursement. And we enjoy working with everybody on this panel, and we make a really well-rounded team. So Patty and Mark and Charles and everybody, between all of us, hopefully we should have the information that you guys would need.
Okay, thank you, Doug. And Patty Harper joined us here, so she had a little bit of time. And so Patty, tell us about what you do in InquiSeq and InquiDocs and all the neat stuff you and Jeff are doing.
Okay, well, thanks, Mark, and thanks the rest of the panelists. The one good thing about this COVID is that we've been able to do these things and collaborate. And another one of our consultants calls it have an RHC brain trust. So I appreciate that. So InquiSeq is also focused on rural health, critical access hospitals and rural health clinics. Mark mentioned our InquiDocs. We have a cloud-based RHC perpetual compliance program that is something that we feel like is performing very well. We also help with anything that is needed with rural health clinics or critical access hospitals, compliance, revenue cycle, pretty much a one-stop shop. We're not as big as Charles's company, but we are growing also, and we have clients in 22 states now. So thanks for letting us be on here again.
Okay, all right, Patty. Well, thank you. That's fantastic. A little disclaimer here is I tried to update the information as of today. Some of the stuff came out just yesterday or the day before, so we're not going to be completely up to date. The Brain Trust has not had a chance to work through some of this stuff yet, so just we will let you know about that counseling information that came out yesterday, but I'm not sure what we want to do with it. So everything is update as of today. If you do have questions, if you will type those in, but let's wait till we get through the presentation. Hopefully I will answer most of those questions, or one of the panelists will answer these questions as we go through. Again, once this session is over, it will be recorded. We will put it on our Facebook group. It'll go on YouTube, and it'll go on our website as well. And then, of course, you can get your hands on the slides as well. So we don't need to get a lot of questions about where to get all this stuff. Our agenda, we're going to look at 5 things, and hopefully this will be a relatively quick webinar. At least by my standards, it'll be quick. The first thing we'll talk about is the PHE has been extended for 90 more days. The provider relief funds reporting requirements, those have changed. Provider relief funds are taxable. That'll be a very easy update. They're taxable. And exceptions to the productivity screens for RHCs, that's been one thing that Julie Quinn and I have been getting a boatload of phone calls and emails and Danny Gilbert, who works for us on cost reports. We've been getting a lot of those. So we'll talk a little bit about productivity screens and sort of walk you off the cliff on that one. And then, of course, the cost reporting implications for the payroll protection program as well. Hopefully there's some good news about that. Our first item is the extension of the public health emergency. That just came out the other day, and that's going to be extended for 90 days. So what that will do for us is it will keep us being able to build telehealth till at least, I did the math in my head, so my math may be off a day or two, but I came up with October 23rd, 2020 is how long the PHE has been extended to. I would think that would get extended another 3 months as well once we get to that point, the way things unfortunately are going. So the big key there is, again, our RHCs can be a distant site. We can continue billing that $92.03 that we're getting paid from Medicare for that. So that affects our Medicare reimbursement. Hopefully the commercial insurance companies and Medicaid will follow along with that PHE guideline and continue to allow our RHCs to bill as distant site. And then here are the waivers that would continue. RHCs are not required to have a nurse practitioner, PA, or certified nurse midwife on site at least 50% of the time during the PHE. That comes in handy when I know we've had a couple of clinics lose their nurse practitioner and we're worried about getting a waiver. And I was like, well, technically we have a waiver already because of COVID-19, but that doesn't mean don't get out there and start looking for another nurse practitioner PA, because it's hard to find them, but that is out there, so you can sleep a little easier on that. You can also establish facilities without walls or temporary expansion sites. That's come in handy if you've got one RHC already and you want to expand to other locations. If you want to do COVID testing for lab services or whatever, you can have these temporary sites, and they can be rural health clinics during the time of the PHE. Once the PHE is over, then that location will no longer be eligible for RHC reimbursement. I haven't seen anybody do this yet, but you can have home visits by nurses and get paid at the RHC rate. That used to be something that a very, very minute number of RHCs could do, mainly in frontier areas. I think it was like less than 1% of all RHC visits the year I looked at it were home visits by nurses. And then finally, if you're a provider-based RHC and your hospital needs to expand over that 50-bed limit, if you're less than 50 beds, there's no cap on your reimbursement from Medicare. If you're 50 beds or more, there is a cap. It's the same cap as the independent RHCs, which is $86.31, and nobody wants to be capped at that. So that exception still applies. And then if you want to see all 6 pages, there's the link to this, and it's about 6 pages long. It's a document that's going to look like this. And I'll go through these slides pretty quick, and then I'm going to get Charles James as soon as it's over. We tried to get Nathan, but Nathan's busy talking to the CMS folks, trying to get things correct for us for RHCs on this HEALS Act. This is the next COVID stimulus piece that they're in Washington right now arguing about, and both Patty and Charles are on the board of the NARHC, so they're going to know more about what's happening behind the scenes. Here's something that Nathan has asked us to do. Well, this is a link to all the senators and their staff for you guys to lobby. This is a very important time to lobby because they're in the middle of arguing about this, and we want to make sure that we're included in here. Right now, they're talking about extending the telehealth system that we have right now for another 5 years, which that sounds good. 5 more years sounds good. The problem is that payment at $92.03, while it's attractive to independent RHCs, for provider-based RHCs, that is a kick where it hurts. So we don't really want that if we can avoid that. So that's something that Charles can give us an update on. Another piece to it is there's $225 million for rural health clinics. If you remember the $50,000 check that you got for COVID laboratory testing, that was a distribution of 225 million. So if you divided that by the 4,500 RHCs in the country, each of them got about 50,000. So that hopefully we'll get $50,000 for some. Hopefully it won't be for lab COVID-19 testing specifically, because that's hard to get done for our RHCs. And let me see here. Okay, there we go. That's it. Charles, you want to give us an update, and Patty or Doug, if y'all know anything about what I just said, or if I misstated something. I tell you, it's hard to keep up with everything, and sometimes I don't really understand some of the things that they tell us. So Charles, why don't you go ahead first?
Great, thank you, Mark. So indeed, if we could maybe go back one slide.
Yeah.
On the HEALS Act, what I have to say, it's kind of funny, because when we were talking about this before, I was like, what are you guys talking about with the HIL Act? The HIL Act, and I thought, well, I guess that's your Tennessee. That's your Tennessee coming in, right?
That's not my accent right there. We go up on the hill down here in Tennessee.
So of course, one of the big issues we're confronting is what's going to happen to telehealth as we get out of this, hopefully sometime soon. Though I think we all need to be realistic that, boy, Google isn't having any employees back in 2020 and not until 2021. So I think we're going to see this public health emergency extend. So in the context of the HEALS Act, what that gives us is some time to prepare for what the future looks like. Now, this HEALS Act is a big deal. And yes, we have a lot of different opinions on it. NRHA is not supporting this because it doesn't lock in some of the things that hospitals need. And we won't go down that rabbit hole. On the face of it, we think that $92.03, many of us would think, oh, okay, well, that's great. That locks in what we're doing. But ultimately, that's going to erode over time, where just like we see with the independent cap, that $92.03 is not going to get us where we need to be. So here's the other thing that we have forgotten about, though, that I want to mention, is that we still have the RHC Modernization Act out there. And we're still trying to get the rates pushed through and the independent cap moderated. And I don't want to forget about that in the context of the HEALS Act. Right now is the time to be talking to your legislators about what you need. Come to any of us and we can provide you with the legislative resources that you need. I can make 10 calls as a consultant that matter zero to the legislators to whom I am speaking, because I am a mercenary. I'm not a provider. it is fundamentally important that you all can get some providers on the phone to your legislators and beg them, here is what we need. From an RHC perspective, of course, our position is we want a different rate than this, but any input you can provide them on why these things are so important to us is just fundamentally, is just critical. So we don't like the lock-in $92.03 rate. We want the AI, and I'm going to speak for Charles James at the moment. What we would like to see is telehealth visits at the AIR. The telehealth visits get included in the denominator, the visit number on the cost report. And we go down the road and it's not any more complicated than that. And in the context of the Modernization Act, then, if we can get independent caps up to $110, $120, we get the AIR in the immediate term, $110, $120. We get the AIR for telehealth visits. I think we'll be cooking with gas as RHCs. And I think that coming down the road, we're going to see some provider-based revenue neutrality issues that jeopardize our provider-based reimbursement in the long term. And we really need to be advertising what we need as rural health clinics. So AIR for telehealth visits, RHC Modernization Act. And please contact your legislators. Your voice counts. Thank you.
Okay, thank you, Charles. I appreciate that. Patty, do you have anything to add to that?
I don't have much to add. Charles did a great job on that. I would say that Seema Verma did make a quote that I used in a presentation earlier this week, saying now that providers and patients have both tasted telehealth, she did not feel like it was going to be going backwards. So I think it's really important that we're looking ahead, and the 5 years is a great thing, but I'm with Charles. We really need to get that at the all-inclusive rate and not a fee-for-service amount.
Okay. Douglas, do you have anything you want to add to it, or should we just move on?
Surprisingly, I did a hometown health webinar in Iowa, and then we did a survey of our RCM clients who are rural health clinics, and over 80% of them are doing telehealth right now. So they're almost all using it now. So I think people are really adopting it. So I think this is important. So I agree with what everybody says. The usage rate, though, is very high.
Yeah, that's what I don't know who said it, but one of the things that somebody said, the genie's out of the bottle, and that's absolutely true. People don't want to go back. I've started using thank goodness I can use telehealth with my doctors here, and it's been wonderful. It really is so much more convenient than driving down to the big, huge metropolis hospital down in the middle of town and trying to park and run around and all. It's absolutely great. So it's something we want to hang on to. So okay, well, let's move on to our RHC Provider Relief Funds reporting here. We got some good news from that is that we don't have to do these quarterly reports. When the regulation first came out, they were saying we were having to do, if you got over $150,000 of total funds, you had to do this quarterly report. And now they're saying, no, there is no quarterly report due anymore. But if you got over 10,000, which pretty much everybody got over 10,000, you're going to be reporting to the federal government at the end of the year. This is the one pager that came out on July the 20th describing what has to be done. And I basically summarized it on the next page. So what's going to happen is we don't know what the form looks like yet, but you don't have to do a quarterly report. So let me tell you that. I've gotten about 1 million phone calls of people saying this quarterly report's due July 10th. I need to get it done. I'm like, there is no report anymore. So you don't have to worry about that. They're going to give us instructions on August the 17th. So we're going to hold our horses till August the 17th, and we will find out what type of reporting will be required for these provider relief funds. Effective October 1st of this year, they're supposed to have a portal open. Another one of those wonderful, glorious portals that are so fun to deal with. One of those will be open where you can submit this report. So what happens is if you spend all of your funds, if you've already spent the whole $103,256 and the $49,640 of COVID funds that you got, and the bank account is empty from those funds, then you could, in theory, report on October 1, 2020. Now, if you're like most of our clients, a lot of them are still sitting on that money, sort of using it as very slowly. So if you use all the funds during the year, you could go ahead and report that. As soon as you get them all used up, you can report them starting October 1st. If you still have funds in your bank account on December 31st and you spend some of the money in 2021, then you're going to have to fill out another report as well. So let's just assume you're like most clients, is you're going to have some money left over as of December 31st. What you're going to have to do is prepare a report, how you spent your money in 2020, and then submit that in the portal by February the 15th, 2021. That's going to be the boat that most of you are in. And then in 2021, whatever that leftover money is, you're going to have to report by July the 31st. So that's what we know as of now. It would be nice to have the report so we can tell you, here's what you're going to have to keep up with. We just don't know. So it's another one of those hang tight. We're going to have to do something down the road, but we're just not doing it right now. So and then here's just some of the quarterly reports are not required, and then there's just a very summary. We're like most of the consulting and accounting firms. We're going to put together, when we do our cost reports this year for 2020, we'll be adding a piece on it to help you with this reporting. Get somebody who knows about RHC cost reports. Charles and David, they do a great job. Julie Quinn, the Thwiftly, those people that are doing cost reports, and those people that are really good at this sort of thing are going to be on this list. The NARHC has sort of a vetted vendor list there, and everybody on this phone call is on that list. So if you just click on there, you'll find somebody really good to help you with that if you need help. I don't know how hard this form is going to be. It may be something you can do yourself, or you can get somebody to help you. So that's our plan for the year, is to help you with that. I think that's all on that particular subject we have. Patty, do you have anything on what we just said?
No, I'm good with what you said.
Okay.
Thanks, though.
Okay, Douglas, you got anything on this reporting, or is there going to be a module in Azalea that helps with people like this? That's probably more of an accounting thing than a billing thing. But you got anything on this?
No, I think you covered it. I think and that slide did a really good job with the dates.
Okay, and Charles, you got anything on reporting? I guess David, you should have had David in here.
I know, I should have. Here's the dirty secret. He's going camping.
The smart man. So, okay, we'll just, we'll move on to the next one. And this one's, let's see here. Wait a minute. Where did I go? Okay, here we go. IRS provider relief funds are taxable. This is something from the IRS. So that $150,000 you're going to have to include in your taxable income. And I'm sure that Patty and Charles and Doug don't really want to talk about that. So if y'all do, speak up, but I'm just going to move on to the next one, because that's sort of bad news, is that they are going to tax you on that. So if they include that in your gross income when you're doing your tax return. So when you talk to your tax accountant, I'm a CPA, but don't ask me to do your tax return, because I haven't done one in 30 or 40 years. Okay, pediatric RHCs. This is what I wanted to remind you about. If you're a pediatrician and you're an RHC and you've not received any Medicare monies yet, they've extended the deadline for you to apply to get you get 2% of your, I think it's your gross receipts or your net receipts on your federal income tax return from either 2017, 2018, or 2019. If you've not received that money, then there is a deadline of August 3rd where you can apply for it, and you can get 2% of your annual reported revenue. Most of the RHCs that I know have already received this money. There was a distribution from the general fund of think it started off with 30 billion the first time they sent some money out, and then another 20 billion came out later. And most of our RHCs already got that money. If you got those two smaller checks, and smaller, they're in the thousands of dollars, but they're smaller compared to the 103,000 and the $50,000 check. If you got those two smaller disbursements, you are not eligible for this money. It's mainly for pediatric CHIP providers and dentists. If you have a dentist that's a part of your group, or you know one, they are eligible for this distribution as well. The dentists were left off of the initial distributions as well, and I think that's one reason why they extended it. And here's the document where they give you the instructions on how to do this, and that was I think it's from here, provider distribution fact sheet. If you click on that, you're going to get a picture of something like this. And then okay, so that's pretty much all on that one. Waiver of productivity. Before I move on, does our panelists, do y'all have anything y'all want to say about the provider relief funds, this extension here, or just in general?
Just that on the testing, I think you're right. I've talked to a number of rural health clinics. They're like, so here, what upside down are we in, where we have a lot of RHCs that don't want money? It's like, don't send us the money. So ultimately, yes, we're having trouble if some of our smaller independents especially get that second testing payment. They're like, I don't have anything to do with it. So it becomes kind of a judgment call on how you handle that money, especially if you get a second tranche of it. So
yeah, and what we were talking about, I don't know if we were talking when we were live or not. I think Charles and I think the panelists, we talked a little bit before we came on live, was that we're seeing a lot of our clients are having a hard time spending that $49,640 that you got for COVID laboratory testing, because number one is you can't get the equipment. If you can't get the equipment, you can't get the reagents or the supplies to run the test. And if you can get that, you have a hard time getting the PPE to protect your employees, and it's hard to spend that $50,000. And a lot of communities, you've got urgent care centers, you've got the health departments, you've got everybody and their brother is doing these tests. So it's very hard for you guys to spend the actual $50,000. Patty, I think some of your clients have the same issues as well. Is that right?
Yeah, I think yes, they're having trouble spending that money as well. And just a caution that if you are trying to spend that money, make sure that the equipment you buy is on the FDA approved list. If you can get them, but they're all back ordered from what I understand. So there's only a handful of machines for the COVID point of care testing that are FDA approved.
Yeah, and even those are not as reliable as you'd like them to be. Was it that Abbott one it's like a 30 or 40% false positive or false negative rate? I mean, so it's hard. Doug, I see your line is open too. You got something to say about this?
No, just that I was thinking if any of our clients have gone out of their way to get that equipment, and I can only think of a couple. So I don't think a lot are trying to go out of their way to get the equipment. I think it's easier to just get the swab and send it off for them.
So Mark, we do have people who have made modifications to their building to be able to have a covered drive-through space for testing. So everybody's not just dashing out to the parking lot for those kind of things.
Yeah, that is a really good use of it. Sort of retrofitting your building to deal with COVID, because like Charles said, this is going to last for a while. This is not a 3 month, three more months. This will be another extension and probably another extension as well. So we're going to be dealing with COVID probably for the next 2 years, the way it's looking. So until they get a good vaccine for it. So that's a really good idea, Patty, is to make those sort of structural modifications so you can do this COVID lab testing for the long run, and that's an excellent use of, and that's an allowable use for these monies. So
can I say one thing about parking lots?
Yeah.
We get a lot of questions about parking lots, and sure, it's always going to help to have maybe a policy on how you treat your parking lot visits. But parking lots are covered, that's part of your RHC. And even now in the state operations manual, it clarifies some of the things that we can do, quote unquote, outside of the four walls of the RHC. And that parking lot is your address. So, you know, sometimes we as healthcare administrators, of course, want to overthink everything, where, you know, if you got a patient, you need to go out of the parking lot and test, or you need to go out of the parking lot and see, you go out of the parking lot and see, and maybe put them in the note that was happened in the parking lot. So your own documentation, but there's really nothing tricky about that. So yeah, if your testing presence goes out to the parking lot, and we can think of a lot of things that would apply to testing. Okay, how about laptops? So I can take my laptop out to the, you know, there's just not a lot of meat on the bones of what we can or can't use these for. So don't be afraid of parking lots is my main thing.
Okay, perfect. I'm not scared of the parking lot. Okay, waiver of productivity screens. This shows exactly how old I am because I used a Lucy picture there when she was working in the chocolate factory and things went sort of astray. So productivity standards sort of feel like that as well. So this is a cost reporting issue. Typically, when we do a cost report, we're gonna ask you for a CPT frequency report. We want it broken down between your physician, PA, nurse practitioner, clinical psychologist, and clinical social worker, so we can put those total number of visits. And when I say total number of visits, I mean Medicare, Medicaid, self-pay, no pay. Anytime you have a face-to-face encounter with a patient where there's a medically necessary service provided that reaches at least the level of a 99212, that is a visit for our Medicare cost reporting purposes. So there is a minimum productivity standard built into the cost reports. And for a full-time physician working a full year, 12 months out of the year, working 40 hours a week, that productivity standard is 4,200 visits. For a nurse practitioner or PA, it's 2,100 visits. And if we broke that down on a daily basis, it's going to be basically 17 visits per day for a physician, and between 8 and 9 for a nurse practitioner or PA. If you don't hit at least those minimum levels of productivity, there is a chance that you could actually reduce your cost per visit if you're not meeting those productivity standards. And think about your monthly volume. For a physician, that's about 350 visits, and for a nurse practitioner or PA, that's about 175 visits. So if you're going below that right now due to COVID, you know, and one of the problems with COVID is patients didn't come in. There was about a 60% reduction in visits in March and April, mainly April, that our clinics saw. And so your visits went way down. You did a ton of work via telehealth. And this is another problem that I guess Charles and Patty are dealing with when you're doing lobbying is telehealth visits are not considered to be an RHC visit because they don't qualify for the all-inclusive rate. So your time of your provider that's doing those telehealth visits is not going to be counted towards these FTEs, which that's good. But you have to keep up with it. It's bad though that you don't get to count those visits and you don't get paid your all-inclusive rate, especially if you're a provider-based RHC, because your all-inclusive rate typically averages about $214 a visit, and it's going to be at $92.03. So also, if you're having a short cost report year, remember to reduce your FTEs. A lot of times, like Patty's telling me that they're doing 20 new startups, and doing that, if you're doing one of those new startups and it has a short year, remember to change your FTE. Just because I'm a physician working there, I'm not a 1.0 FTE. My clinic was only open for 25 for 3 months of the year, so that's I'm a 0.25 FTE. So make sure you do that. Okay, so what the SE 20016 that came out on July the 6th said that we can get an exception to productivity standards during COVID-19 because your volume has gone down by 60%, and it's really going to hurt you on the cost report if you're not meeting those productivity standards. So you're allowed to do that, and who's going to tell us that you get that you've got a waiver? It's going to be your MAC, your Medicare administrative contractor, the people that process your cost report. Most of the ones we deal with are Palmetto, CGS, and Novitas. That's the vast majority of the cost reports that we do. There's Noridian, there's First Coast, there's a couple other MACs out there, but here's the actual, and I'm not going to read chapter 13 for you. That's where chapter 13, I call it my Bible for rural health clinics. So if somebody asks me a question, I go straight to chapter 13. So here's how they're computed. And I'll let you read that on your own time. There's the information that I just gave you. I just gave you a little bit more detail, but every MAC has separate rules. They have different rules, and so you're going to have to go by that. So we've actually printed some of the rules here for you. This is from Palmetto. There's not a whole lot in here. Basically, send us a note with your justification for exception to the standard. Okay, simple enough. We can do that. And then this is next one here, CGS. And CGS, notice here, I may be going to jail here, I don't know. It says confidential unpublished property of CGS, do not duplicate, do not distribute. Distribution is limited solely to authorized personnel, copyrighted. And so when I saw that, I thought, oh, that's crazy. Why are they putting this on there? They're not going to post this for their clients. So I emailed and didn't get a response to CGS. I called Joella here, and then I finally called her, and she called me back and said, oh, no, that should not have been on there. We've actually put this on our website. I'm sorry about that, blah, blah, blah. So I'm not going to get in trouble for sharing this with you. But here's where you're going to send this email to if CGS is your MAC, and you're going to put some information in there. Where is it? If your provider name, provider number, cost reporting period, and explanation for your request. Again, pretty simple information for CGS. Novitas, they're sort of the fly in the ointment here. They sent this out to everybody. This is on their own website. And there's a request form that they sent to people. And this request form is an Excel spreadsheet that is like, I printed here, it's like 2 pages long. And it's got some really pretty complicated sort of ask from you. So they want you to, number one, they want to prove that you're in a HPSA right now. They want you to explain why, if your clinic employs more than the minimum number of staff, why you have more people there than that, and why you're not meeting those standards. Document your population base. Document whether new physicians or mid-levels were added during the cost report period, and then finally come up with a justification for this. So they're going to make you work for this. My thinking when I first saw this was like, oh, this will be a very easy thing to get if we're missing these productivity standards. So that's what 3 of them have done. So after showing you that horrible Excel spreadsheet from Novitas, then I'm going to tell you, don't panic. I mean, and really don't panic. What's going to happen is whoever's preparing your cost report, you don't really have to do anything right now. Submitting. Everybody's been emailing me and calling me saying, we need to submit this as soon as possible. Like, no. Let's wait till we get the information from you on the cost report, and then we will see if you need it. We still have time. Julie Quinn with HSA, she put something out in the NARHC summer issue there, and it's pretty much what I've been telling our people is wait till you get your cost report information in January or February of next year. Get us your visit counts very early. Get us your FTE counts very early. We can take a look at it, and we'll know whether we have to submit this or not. And so here's one of the issues we just talked about. Telehealth time does not count in your FTE. So you want to keep up with that now. That's something that you want to make sure you're doing time studies now, so you have that information when we have to submit this information to your MAC. Also, your telehealth visits are not included in those RHC visits. So make sure you have a system. If you have to use a modifier or whatever it is, or something that's an internal modifier that tells you that it's a telehealth visit, you may want to start using that 95 modifier on that, so we know it's a telehealth visit when we're preparing your cost report. And then you're going to have to keep up with your costs, because we have to pull that cost out of the cost report. It's not going to be an allowable expense, and it's going to actually your visit numbers are going to drop down on our productivity standard, which is going to hurt us, but your FTE number is going to drop down as well. So I highly recommend reading that. Here's what my thoughts are on it. Is number one is keep good records from your time study. Get your cost report information into us early. If Julie's doing your cost report or if David James is doing your cost report, get them that information in early on your visits and your FTE so we can review it and not miss any type of weird deadlines. And then at that time, complete your waiver application. Remember, there's special email addresses that you need to send these applications to. So don't submit it with the cost report. It may be okay to submit it with the cost report, but I wouldn't want to take a chance on it. I would actually, if it tells you to send it to an email address, send it to that email address separately from the cost report. The MACs have said as long as we get this application in before they start looking at the cost report, we're good. So if you have a 12/31 cost report, they're due by May 31st, and the MACs will usually look at them about a month or two after you sent in the cost report. So you technically have a couple months after filing the cost report to get this waiver request in. I would not wait that long. I would, before you file your cost report, I would send in this waiver request just to protect yourself, because they can't work on that cost report unless they have it. And so that's my that's what we would do. What you want to do is keep a good time study, and basically a time study for Medicare purposes. When you read the rules, it says you should do 1 week per month. They gave some relaxation on those for COVID-19, and they say basically if you can just do one time study. So if you just do 1 week of time study, that would work. I'd rather go the old method there and do 1 week per month. But remember, you're going to pull your telehealth and telemedicine time out. Here's a good form. I think this is either David's or Julie's, one of the two, where they actually break off your time, and you sort of in 15-minute increments you can keep up with your time. And do remember to add telemedicine to your listing here as well. So that's what we want you to do as far as productivity standards go. Right now, really don't panic about it. Just make sure you're doing a good time study and sort of keep up with your data so that your cost report preparer has information to do that. So I'm going to stop there. And Charles, do you have anything on this particular issue?
Not yet. I'm waiting for your next topic.
Okay, all right. Wait a minute. Okay, all right. Doug or Patty, do y'all have anything? Because this is sort of Danny and I's ballywick. This is what we do 200 cost reports a year, so we do a ton of them. I know David, he probably does 300, and Julie probably does 400. So we're the slackers compared to in the cost report preparation business, but we do enough of them to know what we're doing.
I just recommend from a software perspective, you mentioned earlier, like maybe using a modifier to help identify the ones that are telehealth so you can separate those from the face-to-face. What we like, or what I would recommend, another idea is to create a location in your billing system that is for telehealth only, and tie that to your scheduler and to your visits. Use that so when you're running your reports, you can carve out by location. So like for our RCM clients, for example, we do the billing, we set all that up for our clients. So when they are ready, we'll be able to take the reports and split it out by location and carve out all the telehealth.
Okay,
that's
fantastic.
Pardon me, Mark. On that topic, that's a really good point. And on that modifier 95, remember, it's optional, but we've all been encouraging using that for the express purpose of being able to identify what services you've provided via telehealth. Now, this is also a dangerous statement I'm about to make, but when we're billing telehealth and using just that G2025, I think it's dangerous not to somehow capture the actual service that was rendered on your practice management system for a variety of reasons. So what we're doing is we're posting a G2025, but we're posting and suppressing the additional detail. For example, if it's a 99213, we're putting the 213 on there as a zero charge, suppressing it, it does not go on the claim. This is an optional method, but we feel like it's really important to use the modifier 95. Doug's suggestion also is exactly what we did. We have a different location set up. So that's a really good solution because we're going to be held to account for a lot of these costs. And I think it is also just fundamentally important to know what services we provided for those telehealth visits.
Mm-hmm. Yeah, you think you're already kind of doing that now anyways for any ancillary services that are getting bundled. So keeping the codes on there, suppressing them is a good idea. And then too, for the cost sharing, like if you are trying to figure out, was this a wellness visit, that I can put a CS modifier on there, having the code listed there will help you remember if you have to go back to see if you need to go add a CS before you bill the claim because it was a annual wellness type visit.
Okay, we're gonna, Patty, do you have anything before we move on? Yeah, I don't know. Patty may be having issues there. I saw she went green and then she went red. So we'll move on here. Next subject is payroll protection program. Cost reporting protection implications on it. I said don't panic on the last issue. This one here, we had a little bit of a panic because CMS came out last week saying that that the reimbursable, if you use the PPP loan to pay salaries, then that expense is not going to be allowable on the cost report. So that's going to potentially lower your cost per visit, and especially for provider-based RHCs, they would definitely take a hit if that was the case. Our independent RHCs, some of them would take a hit and some of them wouldn't. It would just depend on how much above their cost per visit is above the cap. But most of them would be in jeopardy of losing some reimbursable cost. And the National Rural Health Association wrote a letter to CMS about this, about what sort of impact it was going to have. And so here is the letter. And this is what concerned them. This is the quotation from them: to prevent the duplication of benefits from the federal government, i.e. once via the SBA's PPP loan forgiveness and a second time through reimbursement of Medicare share of reasonable costs funded by loan forgiveness, providers must offset the amount of the PPP loan forgiveness from their operating expenses they report on the Medicare cost report. That was a quote from a CMS source that sort of had everybody in a tizzy. And so we got some good news this week. Some of the Senators Collins, Rubio, and Shaheen, they looked at this and said that that was definitely not the intent of the law that was passed. I guess that's the CARES Act, and that they did not want CMS to do that. So this is something that if you're lobbying and you're talking to your people about the things that Charles talked to you about earlier, this is something you really want to mention as well, because this would have a devastating impact on our provider-based RHCs. For sure, it could have a pretty good sized impact on our independent RHCs as well. So let's see. Charles, you want to talk about that some more?
Yeah, Mark's exactly right, and it certainly feels like a poison pill, and I don't want to be paranoid and cynical, but I'm geared that way a little bit. So it is a huge deal. And yes, if you think about what it would do to a critical access hospital that got $3, $4, $5, $6 million in this money that is all of a sudden not in their cost report, talk about endangering at-risk entities. So here's our argument. If you make these calls, this is a huge deal. What we were pushing for, and I'll just speak as Charles James right now, is that we really want these monies to be treated like 330 grants. 330 grants on the FQHC world are not offset like this. So we really, really want 330 treatment of these funds. And the argument for that is there are restrictions on these funds. These are not open-ended use of funds. So we need them to act like 330 funds for FQHCs and not be offset like that. That's the language to use.
Okay, that makes a lot of sense, because I know from somebody preparing cost reports, when I saw this, I sort of shivered. It's like, oh my goodness, this is not only is it going to be a nightmare to handle on the cost report, but I could see a lot of cost per visits going right down the drain with this. So we're running we're running pretty close on time here. I only want to do this for an hour, so we won't have a lot of time for questions here. But let's go ahead and do the breaking news here. This is something that I don't really know. I don't think any of us know a whole lot about. This was just released yesterday. There's reimbursement now for counseling patients to self-isolate at the time of COVID-19 testing. There's some money there, like most things that we deal with RHCs. This works really well for fee-for-service, but because of the all-inclusive cap that we have, some of the things that they ask us to do on here and how we get paid, it doesn't really work that well. So I guess I'll put Patty on the spot here. And Patty, can you help us with this, what we know as of today? So
I'll try to, Mark. Yeah. And Doug is going to jump in if I start drowning. So this just came out yesterday. Like Mark said, it's intended, as most things are, to be applied to Part B services. So we do know a couple of things. There is this checklist that's up on the screen. These are the points of counseling that you have to go over with the patient. So we just can't say, oh, you want to be tested for COVID? Okay, great. Go home, wear your mask, be good. There are specific things that we have to, and we're going to have clinical documentation that we have performed this counseling service. So we know whenever we assign an evaluation and management code based on counseling, that we have to document the time that was spent counseling. We have to say that it was 50% of the evaluation and management services or more. So a lot of questions we're getting is, okay, I've been holding COVID lab visits because I didn't have an E&M to attach to those. So now that I can do this, can I go back and attach this E&M to stuff I have hanging out there for labs? And none of us are comfortable with that because it's very clear in this guidance that the counseling has to take place at the time that the lab is performed. And so you're going to want to make sure you have clinical documentation for this. You're going to want to make sure that that you are covering all the points of counseling that are on this list. Doug, you want to add anything?
No, that's right. I agreed with that. So I feel like this is more suitable for visits moving forward. It's really more for fee for service, because it's saying that, hey, if you got a patient coming in for testing and you want to counsel them, you could make money, but really, you know, it's just time that maybe you're spending extra that could get you a higher E&M maybe, but that's not really great for RHCs. So I would think that, yeah, it's just moving forward. If you have these, I would suggest getting them added to a template, like Patty said, make sure time is recorded. I mean, it seems like their main goal here is they had a study that said, if you go ahead and start isolating now, it reduces transmission by 84%. You get, or 86%. You get people start thinking about contact tracing and stuff like that, but I really just don't see. So it's a good idea to do the counseling. I just don't see how it'll benefit RHCs a whole lot, other than maybe just considering if you do have someone coming in for a test, you know that if you do provide this counseling, maybe you could qualify moving forward for something that maybe if they were just coming in and then leaving again and you weren't providing any services, this might be an opportunity for you to gain an AIR billing that you wouldn't otherwise.
I think one application of that might be is if you have walk-in hours and you have a walk-in patient that comes in and wants to be tested, if you go through this counseling with them, then that would give you an evaluation and management to append to that visit. But we hopefully will get some RHC guidance on this. It just came out yesterday, so we're all looking at it, you know, like a calf at a new gate right now. So we'll figure it out.
Okay.
Thanks, Mark.
Okay, no problem. Thank you, Patty. Thank you, Doug. Charles, you got anything on this before we move on to open it up for questions?
No, sir. Thank you.
Okay, good. There was a nice little study that came out here just this week. It's a little booklet that talks about all the different funding sources for RHC. So I'm just going to show you that it's out there. My plan was to read some of it last night. I did pick up this little matrix here for RHCs, although I didn't see the 225 million for COVID testing on here, but there's some monies that are available to RHCs on there. It's about 50, 60 pages long. And so, like I said, I was going to read it last night, but I had a little bit of food poisoning. So I don't know what is worth reading Medicare documents or food poisoning. It was sort of a little bit, it was pretty close to each other. So
I'll take the Medicare document, Mark. Thank you.
I think so. Danny, do you have some questions there? We just have a few minutes. I'm trying not to go over 1 hour because I'm terrible about taking too much of people's time. So Danny, do you have a?
Yeah, we actually only have one right now.
Oh, wow, that's really good.
It says the $49,000 that we received for COVID testing, can we use either or both, I guess, for flu vaccine and flu testing equipment? It's not real clear, but that's what it says.
Okay, it's asking if you can use it to buy flu vaccines or flu testing equipment.
That's how it reads.
Well, that's how it reads. Yeah, I would.
Maybe. Is that the idea, to rule out flu before determining COVID, or?
Yeah, I think, yeah, that goes to me, and y'all help me out on this one. To me, that sounds pretty iffy, but I can see where you can make an argument that yes, this is what it was for, so we ruled out flu, so it helped us with COVID, but I think you're sort of in that gray area of, oh yeah, this is real clear. We're going to buy an Abbott, machine that tests for COVID. We know for sure that's going to meet it, but
but here's the other problem is that, this testing funds aren't supposed to be used for anything for which there may be another source of payment.
Yeah, and flu vaccines is reimbursed on the cost report too. So
I think that no.
Yeah, I would say a no too. Also, the testing for the flu to rule out flu before COVID was at the very beginning of the PHE before we had this testing. So I'm not sure the logic to use it for flu to rule out COVID is as relevant in it as it was in March.
Yeah.
But,
okay. All right. Well, the Brain Trust has come up with a no on that one. I was trying to be wishy-washy, which I always do, but I think that's right. I think it's going to be a no. Do you have any others that typed in, Danny?
Yeah, we've got some that have come in. The next one says on reimbursement of funds, it speaks that modifications or temporary structures count for the COVID reimbursement. We purchased the building next to our clinic that has a small building and circle driveway to run COVID tests, so we don't have to bring them into the clinic. Would that count? It's only used for COVID tests. And then a second part of that, why do they say temporary structures?
Charles or Patty, do you have an answer on that one?
Well, my concern is that permanent structure issue. I don't know how that is going to get applied. If they bought the building, does that make it permanent? There's just so little guidance on so much of this that we kind of have to fill in our own blanks. I'm a little nervous on on an additional permanent structure, but at the same time, I know we have flexibility to build on a new entrance somehow, or modify our waiting room so we can have well and sick areas. So it's kind of in one of those gray areas, but man, if you make an argument for COVID testing and it's for COVID, it's hard to argue against that. So unfortunately, I have kind of a non-answer, but yes, I'm nervous about that permanent structure piece.
Hey, Mark, Charles's answer reminded me of something that we talked about earlier. The waiver to have expansion locations, even though CMS says you can, if you're in a state that has a separate licensure process, you really need to check out to see if your state is going to allow you to have those expansion sites without approval from them. So we only have a handful of states that have licensure, but I know in our home state that has come up. So I just wanted to throw that out.
Yeah, I was going to say, that sounds like something somebody from Louisiana would say.
That's what I was thinking too, Mark.
Yeah, because Louisiana has more rules than you can think about. Okay, so we got 1 minute left here, so let's have one more question, and then we will close it down, and I will look at the questions after it's over with and try to put together an FAQ on that and send it out to you guys. So what's our last question, Danny?
Okay, I was looking for one that was kind of,
Give us an easy one that we can actually answer. How about that?
I mean, this one's easy. Can we use COVID testing fund for hiring more staff for our HCs?
If they're doing COVID testing, you can. Is that the right answer? Doug, do you know anything about the COVID about these funds, or are you more of the billing and revenue cycle on that?
Well, more billing and revenue cycle. I mean, I'm just reading the exact language right here, and it does look like that would apply, like they're reading the bullets of the use of funds.
I would want that in that person's job description, that that's what they were hired to do for surge or for testing or whatever.
Okay.
Yeah, I agree.
Yeah. All right, let's go ahead. I got 2 o'clock, so we've held everybody for an hour. So first off, I want to thank Charles, thank Douglas, thank Patty, thank Danny for helping us go through this. And thank you guys for doing what you're doing. You guys are the superheroes. You're out there with patients every day and risking your life and your family's health. And so we certainly do appreciate everything that you do. And so just have a great rest of your day and have a great weekend. And we appreciate it very much. So thank you. Thanks, everybody.
Thank you.
Okay, thank you. Bye-bye. Bye.